Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Okay, summer is ending. It's ending. Okay, we are today here, August 18th, on the picture of the SPY. Tuesday, market going down. Basically, it's because, Trump says the war is going to continue. Okay, so for us, this is a nice sell off. I like it. I'll tell you guys why. Okay, it's very, very simple. Okay, we're getting a little bit too hot up here. A lot of calls are being bought. Okay, we'll get to that and some other things going forward. But first, we're not talking about the technical picture. Despite the down day and despite the weakness in some sectors, this is still a bullish pattern. Okay, we can bring in the moving averages, still trading above the 50 and above the 20, but not above the 10. Okay, but still, the moving averages here are really not important to me once we're in a trend. Okay, I love this sell-off. Okay, but the technical picture still bullish despite today. Okay, so what do the sentiment metrics tell us? Back to neutral. Okay, we were at greed for a while, back to neutral. Never went to extreme greed. This is a very, very hated bull market. Okay, back to the momentum is fearful. The breadth is okay. This is what I like to see. And the put call options were back down to neutral, which is great because they were at extreme greed at some point. So very good. We're cycling back down. We're doing this lockstep fashion. No, not here. This was a move up, but I'm talking about going up 2 steps, down one, up two, down one. Okay, this is what I hope will happen going forward, and it seems like that's the case. We were talking about the VIX, being very, very low. All we want is like an occasional spike up 1 or 2 days, recycle it, maybe one more day. I would love for this market to retest the breakout point. Okay, that would be great. It won't bring us to extreme fear, but it will bring us to fear. Okay, or maybe on the border. Okay, it's good. That's what you want to see. You want to see a retest here based on the hype and then coming back up. Okay, so this is what I love to see. Okay, so of course, let's get to the nice sell-off today, why I like it. Okay, we had the news that Trump says no talks scheduled with Iran as he teases action in Hormuz Strait. Okay, it's just same old crap. Nobody believes him anymore. He needs to get out. If he doesn't, he's going to lose the midterms. It's that simple. Okay, and because of that, we have the oil market basically hovering around the 80, 85 level, 85-ish level. Okay, it's not hovering at the 100 like it was before. It's 85. Okay, eventually it's going to go down. Okay, even with the Strait of Hormuz quote unquote closed, there's going to be mitigating factors that'll bring oil into the market. That is my view. Okay, so and we're sticking to it. Okay, so let's get to this nice sell-off. What do the other indices tell us? The QQQ, yes, another good down day here to alleviate some of the pressure, but it's lagging. I expect it to break highs once the market resumes going higher. Okay, and same with the semiconductors, which are still weak. Broke above this support resistance level, and now it's retesting it. If we go back down on the SPY, the semiconductors will be weak again. Okay, so basically the sell-off is good because it alleviates a lot of the overbought conditions. And the main issue that I was worried about, and I told you guys for a long time last week, was this put call ratio. A lot of calls were being bought and they might get destroyed. Okay, they need to get destroyed, and I hope they get destroyed coming up. Okay, so that's it. I love the sell-off. It's going to be a buying opportunity when it reaches around this level. It's good to put some capital into use. Okay, so what I wanted to talk to you guys about today is I'm playing an earnings trade. Okay, tomorrow after market, Wolfspeed semiconductor stock is going to announce earnings. That's Wednesday, 26th, and it keeps losing money. This is not like a good semiconductor. This is a terrible semiconductor. Okay, if you look at if we go to FinViz and we look at the financials, it's just bleeding money. Okay, let's see if I can blow it up for you guys. Look up, gross margin negative. It doesn't even make money. It's a terrible stock, although it is liquid and it still has a lot of debt. So it's a terrible stock. And oops, I'm going to get to that soon. It's a terrible stock, and I expect it to be terrible in the earnings. Okay, although I don't know how much. Okay, so what did I do? I played it with options. There are many things I could have done. Okay, but I decided to play it with options, and this is the structure we just sorted before. Okay, you guys can see I did a put spread. Okay, a calendar put spread. Okay, the 21st, I did the 21st and the 28th. I sold the 30 August 21st puts, and I bought the 30 August 28th puts. So I sold the ones that are expiring soon because they were, if you look at it carefully, they're very amplified. Okay, before earnings, you're going to see the near-term option amplified. The volatility is much, much higher than the later dated, than the back month volatility. So this is why you want to sell this close, the current week, and buy the next week, the back week. Okay, this we did it for a 60 cent loss debit. So the max loss is 60 cents. However, the stock is trading right now at 31.45. Okay, can I blow this up? Okay. The stock is trading at 31.45, which is this dotted line right here. You see, I didn't do it exactly at the market. I sold them a bit lower, okay, because I am slightly leaning bearish on the stock. Okay, so I will make money if the stock stays between 37 and 25. Okay, 25 would mean a 20% drop. Yes, these stocks can drop 20% in earnings. Very rare, but it's possible. Okay, but I will realize my full debit loss if it goes down to like $20, which is basically a 33% drop from highs in a day. We'll see. I don't think it gets that. If it does, okay. But I like the fact that I'm leaning bearish, but I'm taking it. But I don't think it's going to drop that much. So I still want to be a seller, quote unquote, overall. Okay. So this is how I'm playing this earnings trade. I didn't do like a what would you call it? A spread like this where no matter how low it goes, I'll make money, because the risk reward wasn't up to my speed. I'd like it a bit higher than this, maybe 3-1, 4-1. Okay, so instead, that's because the price of the options are so high, so elevated because of the volatility. So I decided to do just a calendar spread. That's it. Okay, so I'm trying to put the odds in my favor because if it goes higher, okay, if it goes higher by 17%, that's great. Even a 20% move doesn't hurt me that much. I'll lose $15 for every option contract I did. So even a 20% up move, which would be rare, I would lose a little bit. Okay, so I like the fact that it's probably going to stay within this range. Okay, only because the range is so great, only because you have an implied volatility of 200%. So this is what we want to do. We want to take advantage of the fact that it's very, very high and be a net seller. Okay, a net seller. It doesn't look, because you paid a debit, it looks like you are exposed, right? But you have positive vega. Okay, it's not negative. You're not short. Okay, so it's not like you are going long. Okay, you're not like buying the stock, if you will. You're just how can I put it clear? When you're doing a spread like this at the same strike price, you're basically eliminating every other option and just playing the volatility. Okay, so what we're doing is playing volatility, playing vega. Okay, and if it goes lower, we should get a crush in the near-term option in volatility. Here's the bet that we're making. Okay, to be even more clear, we hope that there's going to be a crush on the volatility of the 21st option, the near-term option. More so, the volatility gets crushed more than the volatility will get crushed on this one that we bought. It will, because it's shorter dated. Okay, so there should be a higher volatility crush. However, we don't want gamma to kill us. Okay, so this volatility, the relative volatility crush that we're going to profit from, hopefully is going to be greater than the gamma that eventually gets realized. Okay, we don't want that gamma to destroy us, to get really, really high. Like if the stock drops 20, 25, 30% is when we start losing. Okay, so that's the bet we're making. We're making that the high volatility is enough to offset the potential gamma move. Okay, so that's it. That's how I'm playing it. Wolf. Okay, so it could get down to here. A huge wide berth for earnings. Okay, so that's it. That's my Wolf play. Let's recap. I love the sell-off and SPY. I'm looking to buy if it ever dips right to the 760 breakout level. I love it. The sentiment has recycled to neutral. We can go down to neutral greed as we go higher. Okay. Now I'd like to mention that coming up, everybody is bearish September, October, because it is negative seasonality. Okay, and we might get that to play in. Okay, so we don't know. But if everybody is playing it, you might want to have a little bit of short exposure. You can do with a lot of vehicles, a lot of way to do it, not just buying outright puts. that might be too expensive. Okay, what you want to do, you could, it's not a problem, but there are other ways to do that. Maybe we'll do that. We'll talk about it in another video. But there are ways to be short while not, being, spending a lot of cash, doing it in a very smart way. Okay, so that's it. I like the sell-off. I'm hoping it goes down. Let's see what happens for the rest of the week. It's summer trading, guys. What more can we say? All right, take it easy.